Hey guys, so on this video here today, we're gonna talk about a trading edge name and a trader's mindset. So it is me, your host, Sibongiseni Dlamini, owner and founder of Interprec Asset Management. So Stocks for Hope, it is our division of the stockbroking side or the learning side of our company or of our entity. So without wasting any further time, so trading edge and a trader's mindset. So the points that we are going to discuss here today are really not that much, but we do have a couple of pointers that we need to discuss here today. So point number one, we're going to talk about you need to know what type of a trader are you yourself, and then we're gonna talk about the technical analysis parts, and then we're gonna talk about the emotions parts, and then we're gonna talk about the pillars of a trading edge, and then we're gonna talk about the 9 steps of how a person can find their trading edge, right? So moving along. So just a little word of thought from myself. The market can do what it wants, but how you respond to what it does is the key. So as traders, we should respond with clarity and careful logic and thoughtful processing. So the market does what it does, but what you respond to what it does, it is key. So as traders, we should respond with clarity and careful logic and thoughtful processing of the information of what the market is doing. So it is just a brief word of thought from myself. So another word of thought from Leonardo da Vinci. So Leonardo da Vinci is telling us that learning is the only thing that the mind never gets exhausted from. And learning, the mind never fears learning, and the mind never regrets learning something new. So that's another word of thought from Leonardo da Vinci. So our first topic here, we said that to finding your edge, you need to identify that what type of a trader are you yourself. So are you a scalper? So when you're a scalper, you buy and sell on lower time frames? Or are you a day trader? You buy and sell on the same day. You buy in the morning and then sell in the afternoon, or you execute your trades within the space of a single day. Or are you a swing trader or a trend trader? You buy, sell, and sell in 1 week or a month's time? Or are you a position trader? A position trader buys and holds for a year, or are you invest? You just buy and hold for years. So these it's 1 2 3 4 5. These are different 5 people. These are 5 people which are very, very different. But you yourself need to decide which type of a trader are you. Are you a swing trader, day trader, scalper, position trader, or an investor? So when it comes to me myself, when I'm trading indices like your Nasdaq or your Dow or your S&P 500, I do scalping because indices, they move fast. So when they move fast, I need to get in and get out, take that money and then get out. But when I do currencies, forex itself, I do day trading, execute trades in the morning and then close them in the afternoon. Or sometimes I do swing trading or follow the trend, buy or sell a certain position or currency pair and hold for a specific number of days, or even hold for weeks. So 1, 2, 3, it's when I'm doing currencies and indices. But when I start doing stocks, I do position trading. I buy and hold for even a year, or sometimes I invest in stocks and I just buy and then just leave it alone. So it's important to know what type of a trader are you. So when you've decided on the type of a trader are you need to identify your strengths. You need to identify your strengths on the technical analysis side. So reading candlestick patterns, are you able to read candlestick patterns alone, or are you able to read the whole chart pattern of what is the whole chart pattern is saying to you, or you just trade based on a single candle pattern of what it is saying? Maybe it's a bullish engulfing, or a maribuzo candle shooting star, or a pin bar, or you just read the whole candlestick pattern, whether it's you just read the whole chart pattern, whether it's a bullish triangle, or a falling wedge, or a bullish flag, or like those type of things, a double bottom, a double top. Those are chart patterns. But candle patterns are those mariposa candles, are those pin bars, and so forth. And also, which time frames do you use? Do you use higher time frames, or do you use lower time frames? And after you've chosen the time frame, which strategy are you using? Are you using trend following strategies? Are you using breakout strategies? Or are you using swing or reversal strategies? So these are all the questions you should ask yourself before you find your trading edge. So the next one, this one is the very important part of this presentation. You can do all your technicals in one day, you can do everything, but if you are not emotional intelligent, you will be thrown around you will be thrown all over the place when it comes to markets. So emotional intelligence, it is very important when it comes to trading. So we need to have social skills. You need to know what other traders are doing and be in sync with whatever they are doing. And then you need to be self-regulated yourself. You need to be self-regulated yourself, and you need to be motivated, and then you need to have empathy. And then when I'm saying empathy, I'm saying that you need to be in sync with whatever the market is telling you. If the market is going up, you need to be in sync with the trend that the market is going up. If the market is going down, you need to be in sync that the market is going down, so you can employ the proper strategy if the market is going down or up. And then also you need to have self-awareness. You need to be self-aware yourself. So these 5 things, they form part of emotional intelligence, not just in markets, also in life itself. Also in life itself. Okay. So what is a trading edge again? And why do one needs it? So why do I need a trading edge? What is a trading edge? So a trading edge is a trading method or approach that helps to accumulate more profits than losses. An edge can be a strategy, a technology, psychological fortitude, persistence, understanding of market movements, risk control, or basically anything that allows someone to succeed in making profits where many others fail. So an edge is something that a person that helps a person in making money in the market. So it can either be a certain piece of technology, it can be something that is psychological, or just simple understanding of markets, or someone can have proper risk management skills, or it can be anything that a person that can help a person to succeed in the markets. So there are 4 pillars of building a trading edge. Sorry, there are 5 pillars of building a trading edge. Number 1, you need to have a trading method. you need to have a trading method. And after having a trading method, you need to have time for it. Build time for it. Build time for it. So I wrote on Twitter some time ago that if you can dedicate the next 6 months and then dedicate 4 hours a day on your trading, that can take you 5 years ahead in life. 4 hours a day for the next 6 months, dedicating yourself in trading, it can take you 5 years ahead in life. So time is important, and then you need to know how to execute the trading method. The method, you have time for it, and then you know how to execute that method. After executing that method, you need to know your risk appetite. You need to control your risk in there. When you are risking one position, you need to, let's say you are risking one apple, you need to get 3 apples out of one, right? Let's say you're risking $10, you need to get $30. So that's a 1:3 risk reward ratio. And as well, the psychological part, it is important. So these are the 5 pillars of a trading edge. At least the person, if they can have 4 of these, at least they do have a chance of succeeding in trading. So a trading edge, those without an edge may win trades occasionally, right? But they are unlikely to profit consistently. Yes, if you do not have an edge, you can win trades sometime, but you won't be consistent. An edge is a necessity. Otherwise, the trader is essentially donating their money to the market. So if you don't have an edge, you won't be consistent. Otherwise, you'll be just be donating your money to the markets. Yes, you will make money time to time, but most of the time you will be losing money because you do not have that trading edge in you. So when starting out, most traders do not have an edge, and they say their account dwindles initially, but they are improving their skills. So some guys, they actually do improve their skill over time because they see that they do have a problem because they do not have that trading edge. So a trading edge can be a strategy, right, as we said before, but it can also be a personality trait or a skill that keeps losses smaller while trading. Okay, when I'm saying it can be a personality trait, some people are born, they do have that natural thing of managing money, like they do have that natural thing of managing money. Some others, they do not have that thing of managing money. They are poor at managing money. So it applies here. Sometimes it can be a personality trait, but a skill is something that can be learned. It's unlike talent. Talent, you are born with it, but a skill is something that you can learn over time and then improve it so you can do better in whatever that you are doing. So another trader may have an edge where they always cut losses if the price drops a certain amount, such as 5%, but they don't take profits until they are up at least 15%. Wins will therefore always be bigger than losses, a favorable risk reward ratio. So as I explained earlier on, Scanner, sometimes others, they cut their position. If it goes down 5%, they just get out of the trade and then forget it about it and move on. But when they are winning, they make up 15% of that 5% that they lost. You see what's gonna, they lost 5% and then they make 3 times as much. So this person can be consistent because they lost 5%, but they are making up 15%. So this person can be consistent than others. So let us talk about the 9 steps on how one can try to find their trading edge. So I compiled a few steps based on my experience and based on other people, when I interact with other people, and then I compile a list of 9 steps of how a person can try to find their trading edge. So number one, educate yourself in ways of the market. So when I'm saying educate yourself, learn about what moves price and how much price acts in particular. Learn as much as you can about trading strategies that interest you in particular. Learn about strategies that interest you. Remember what we said, you need to identify what type of a trader are you. So learn about strategies that interest you. If you are a scalper, learn about scalping strategies. Swing trader, learn about swings trading strategies. Number 2, develop your strategy then. When you have a clear focus on how you want to trade, begin developing a strategy around it. A strategy is a method or a formula that is reputable and tends to yield favorable results over many trades. So that's the definition of a strategy. Then test the strategy. With the strategy defined, at least the basics of a strategy, the next step is to test it. Try and find out as many examples of a strategy, and possibly you can just do maybe previous charts and do back testing to test the strategy that you have developed. Okay, number 4, you need to refine your strategy. A strategy may work well, or you may run into some problems. The strategy may not be profitable, for example, but that doesn't mean all is lost. Look at how profitable, or look at how profit could have been made on more trades. So if you refine your strategy, you see how many trades. If you are testing your strategy, and then you've done 10 trades, if 6 of those trades were winners and then 4 were losers, so your strategy is not a loser. You just need to tweak it here and there, and then maybe it will be possible, and then maybe you can win 7 trades out of 10. Unfortunately, you can't win 10 out of 10, but it's possible to win 10 out of 10. But in this environment, we can't give it 100%, at least 70%, 80%. You are consistent. Even 60%, you are doing good. So manage your risk. This is the most important part. Number 5, with any strategy, risk management is important. While a stop loss can help to minimize losses, consider how much you are willing to lose per trade. You can put a stop loss, but you need to know how much are you willing to lose in this trade. So if you have $100 account, you are willing to lose $5, or are you willing to lose $10, or are you willing to lose $50? You need to know your risk appetite and how much you are willing to lose on that particular trade. So risk management is very, very important. So we will do a topic about risk management as time goes on. So understanding trading psychology. A trader must be disciplined, otherwise it is useless trading without psychology. In the field of mental performance, traders need to be able to execute their strategy in changing market conditions. So if the market changes, you need to be able to change with it. So the psychological part, it is very, very important. So number 7 here, you need to keep a trading journal. So this is the most important part, guys. A trading journal contains the thoughts and insights of a trader at the times they are trading, alongside the details of each trade. For example, an entry and exit price, stop levels, and risk and reward ratio. Sometimes on your journal you can even draw the pattern that you entered when you executed the trade. Let's say it was a bullish flag, you can even draw the pattern on your channel, so you can remember the trade. When I entered this trade, this was the setup, this is how the market was doing. You can even take screenshots and save them somewhere on your cloud, on your phone, even on your PC, so you can remember when you look at it. This was the 3rd of February, let's say, for example, and this was the trade and this was the charts. What was happening? This was the before charts before I executed, and then these were the results. Whether if you made a loss or it was successful, you need to jot the thing down so you can remember on now what is it that you are actually doing. So the next step is calculate your edge. It is helpful to quantify a trading edge, which can be done using a formula. There are multiple formulas that can help quantify a trading edge. So this is just an example. Expectancy is equals to win rate average win loss rate times average loss. So it's just an example of how to calculate your edge. So I will do another video based on how to calculate your edge, or even how to calculate your stop levels, how to calculate your take profits. I'll do a video based on that. So this is just an example on how a person can find their edge. So these are just the 9 steps of how to find your edge. So last but not least, be patient and rise and repeat. So always be patient. Consistently profitable trading doesn't come overnight. It takes steps for a long run. No, it takes steps for you to run a successful trading. So using the previous 8 tips to find your trading edge, developing a strategy that works for you may take multiple attempts. It can even take years for you to find your trading edge. So guys, all in all, you need to keep researching, coming up with ideas, testing and refining your work, and working on your mental game, because emotional intelligence, as I said, it's important in this game. For you to find your edge, you need to be emotionally intelligent. Go back to this video, rewind on the slide on the emotional intelligence parts. Always be motivated, have empathy, be self-regulated, and do all the other steps, the 5 pillars of the trading edge, and also follow the 9 steps of how to find your trading edge. Perhaps you will do better over time. So I will try to do other videos like this as time goes on, not just technicals, but these videos just to keep us going. Who we actually talk about the market, not do the market, we actually talk about it on what actually happens on the market. So guys, on Facebook you can follow us on Stocks for Hope. On Twitter it's at Stocks for Hope, as you see it like this, and my personal handle on Twitter it's Bo_Dlamini, and then on TradingView it's Bo Dlamini. On TradingView, what actually happens is that the charts that I post on TradingView, it automatically goes here on the Stocks for Hope Twitter and the account, and then I screenshot the charts I posted on my account. So whatever charts I publish here, it comes here on automatically. So I think it's a good thing, because rather than me posting here and then coming back to post here and here, it would take a little bit more time. Even I can even forget to do something like that. So guys, I thank you. I will definitely check you out on the next video. So I hope you enjoyed this one, and I will try to do more videos like this as time goes on. So thank you. Definitely see you on the next one.